I've already recognized a few faces here from last year. Nice to see you all again. Nice to see those of you who are here at the Evident AI Symposium for the first time. Alexandra, Annabelle, thanks for having me back. Please don't mistake this for pure marketing. It is important that those of you who are here and those of you who are watching from afar know a little bit more about what this is, know a little bit more about what this is, and who better to tell you than Alexandra and Annabelle. Let's start with a little bit of background, right? A context, I suppose, for those who are new to Evident, haven't been to one of your symposiums before, or simply forgot what we told you last year. So what is Evident? What is the Evident AI Index? In short, why are we all here?
Thank you. I'll jump into that. There's a lot of detail, so I forgive people who've forgotten. So, but on evidence, so just a little bit of background. I've, as you know, spent 20 years in the sort of ratings and ranking business. And then in 2018, we established the Global AI Index, which was the first ever benchmarking of nations on the strength of their AI ecosystems. And with that, we got really into the weeds of how to measure something as nebulous as AI in the early days, and looking at sort of the AI development and deployment at a national level. And then, we found that with the accelerating pace of AI and the growing need for businesses to see, and there was a lot of demand from the businesses and banks in particular, who had already been spending a lot of time and money on traditional AI, to look at sort of how do they compare and contrast, and where are they on that journey? So that was sort of the reason why we set Evident up back in 2022. We actually started building the methodology, and we had it ready just when ChatGPT got released. So it was sort of, it happened pretty much at the same time. So we were
exquisite timing.
Quite lucky with timing. I think what luck follows the prepared mind, as they say. But anyway, so we released that index it was the first edition in 2022, January, and as 2023. And just a few weeks ago, we released the third edition of the index back in October 17. And yes, we're here to discuss the results of that and how we put it together.
Yeah, and maybe just to touch a bit on the index itself, for those of you that don't know. So the index ranks 50 of the largest banks in North America, Europe, and then a few from Asia Pacific as well. It's based on publicly available data, so it's holding up a mirror to what banks look like from the outside. And it measures 4 things. So the first is talent. How much talent do each of these banks have, like AI and data talent? What are you doing to invest from like hiring initiatives, training initiatives in that talent? We look at innovation, which is all around the research teams, the patenting, the investments and acquisitions that banks are making in the AI space. We look at leadership, which is all around the executive positioning, the executive leadership team, what they're saying about the bank's AI activities, and then transparency, which is all about how these banks are talking about responsible AI and ethics and how they're organizing those teams that are focusing on AI governance and how they're building trust with external stakeholders. So that's kind of what the index is.
I don't want to go too far into the weeds. We don't have enough time, and furthermore, you can read all about the index by picking up this document, which you'll find outside. But I am curious about methodology, because AI is not like any emerging technology. It's anything but static. Is the methodology something that you're constantly having to refine, or have you been able to stick more or less to what you started with?
Yeah, maybe I'll jump in first. Yeah. We're trying to keep it as consistent as possible because you want to be able to see trends and see how it's changing year on year. But the constant tension is that we're also trying to evolve the index to where best practice is emerging. So we're constantly thinking about what is the optimum talent stack? Like, does there become a point in time where data engineering, for example, the more data engineers doesn't necessarily mean better capabilities, for example. So we're constantly trying to think, how do we adjust the methodology? How do we refine it to be up to date? And one of the areas that maybe we want to talk about at some point is the new metrics that we added in this year around use case reporting. So as banks talk more about the activities that they're doing, what use cases are they talking about? What ROI are they seeing? And there's quite a lot of there we're trying to make evolve it as well, year on year.
I do want to talk about use cases because they still seem, for many people, to be a little ephemeral, perhaps. But before we get there, I think it's worth spending some time talking about the results themselves. I love rankings because they pick winners and losers. And you can't actually see the losers here because you're ranking 50 banks. And there are some, I presume, that didn't make it, right? So those are, I suppose, the losers. It's obviously not as good to come in 50th as it is to come in first. And I suppose it's a source of debate, perhaps, a conversation starter at the very least. What have you noticed now that you've been producing this index for a few years? What are the before we drill into the winners, the actual winners and losers, the biggest takeaways?
In this year's, and over the last couple of years, what
Yes.
we've measured, it is, well, there were areas in the index that were very difficult to get to 2 years ago because there was, as Annabelle said, there was very little reporting on transparency of responsible AI or talking about the impact of the investment in sort of clear, announcements on spend and use cases and sort of the impact it was having. So basically, a year and a half ago, there was just none of that information out there. We had it in the index, we had it in the methodology, but it was very sparsely populated. So what we've seen is, this year has been a sea change in activity. We'll get to the results in a minute. But so what we've really seen is that there's just a lot more activity and a lot more interest and focus on reporting on that activity, because there is now an assumption that all banks are, in the business of figuring out how to adopt classical AI and
They had
GenAI.
better be.
And if they're not, I think they might be in trouble. And so, therefore, that with that comes also much more visibility. So we've seen a sea change in that.
Now, one of the takeaways for me is the consistency of some of the rankings. The top 4 positions remain the same. JP Morgan at the top, Capital One number 2, RBC number 3, and Wells Fargo number 4. And there's a little bit of jockeying elsewhere in the top 10, but not a ton. What does that tell us?
No, it's interesting to see that, on the surface it looks like there's stability, as you say, the top four still, JP Morgan in the lead, Capital One number 2, and then RBC and Wells Fargo. But underneath that, right, there is an enormous amount of activity. So actually, the 10 leading banks in the index, the top 10, are growing at a 2x pace compared to all the other banks in the index. So the leading banks are leading more, right? There's an advantage that's been had already, made by decisions early on in 2017, 18 to make those big, decisions that Teresa was talking about before. Getting that research team in, getting the talent in, doing the hard work of restructuring and reorganization, and thinking about a tech-first or an AI-first business. And so you see that the common denominator in the leading banks are, they're not sitting still. They are able, and they are growing faster than all of the other banks. But also what you see is that they are strong on all of the 4 pillars. They sit in the top 3 in talent, innovation, leadership, and transparency. It's a group-wide, it's an organizational-wide effort. And so that's what we see as some of the common themes.
Another of the inescapable conclusions from this index is that the U.S. banks continue to be stronger, shall we say, than banks from, on the whole, certainly banks from Europe and banks from Asia. The Canadian banks perhaps rank disproportionately well, given the size of the economy and the size of their balance sheets. What can you tell us about regional dispersion, and what should we be paying specific attention to underneath it?
Yeah, maybe I'll take that one. So yeah, just to Erik's point, the Canadians ranked really strongly. On average, we look at 5 of them, and on average, they scored the highest points in the index. Then it was the US banks, although there's some very, very strongly performing US banks, and then quite a lot of bifurcation. There are some quite low-ranking US banks as well. And then the UK was in 3rd place. But you're right, the kind of North Americans tend to be performing slightly stronger than the Europeans have. And I think that what we found over the last year and a half is that when we spoke to European banks initially, they were very much focused on individual point use cases, generating value in specific areas of the organization, which would be, a good approach, I guess, if you're just thinking about the ROI of those individual use cases. But when we spoke to the North American banks, they'd taken this kind of more top-down sort of leadership-led strategy to organize themselves and to build capability. And I think so I think that's where the US banks, they've done that over the last 3, 4, 5 years, and they've built that capability over time, and that's why I think they're still ahead. Whereas the Europeans, they're not just doing that point sort of individual use cases anymore. They're thinking about this group-wide. That's where you've seen the likes of HSBC really ramp up, for example, in the ranking. But that's just that mindset shift that's gone from sort of individual use cases to sort of what capabilities do we need to build, what should our long-term strategy be, and which use cases do we want to focus on across the group.
Europe is an enormous economy, and Europe has some awfully large banks. Well, if you haven't noticed already, there are only, if I'm not mistaken, 6 European banks in the top 25. Should the European banks be worried about how far they're falling behind?
Should I jump into that? I think that, look, it's the bifurcation that Annabelle was mentioning before is seen both in the US and in the European. But the difference between the US and North American banks and European banks are, it's concerning because globally you'll see this bifurcation of the leading banks leading more, getting more market share, and strengthening their competitive position. So for any banks that are, in a period where they're sort of still waiting and seeing whether they should jump in and create a AI strategy, refine an AI strategy, and put some money towards that, and that time is running out a bit because one thing is
might it have run out already?
I think that would not. I think there's still time. Okay. There's still time to catch up. But one shouldn't underestimate the enormous amount of effort that it takes to move into a position to adopt AI and Gen AI at a sort of a more nimble pace. Because one thing is to decide what large language model or provider you're going to do and pick the use cases and identify the problems. But all of the underlying work of the data infrastructure and the governance that is set up to be, being able to address AI-specific risk, it takes a lot of time. So 90% of the work lies there, 10 in identifying use cases, looking at impact, and picking the vendors. So the longer the banks that are considering to sort of jump in and make a big push in this, the longer that takes, the more that gap grows and the more those banks are going to be at risk. So it's not next year or the following, but it's not 10 years away either. So it's somewhere in between.
You both have to live and breathe this stuff all year long, and it's not just the depth that you acquire by virtue of that, but the fact that you have an overview of the entire industry that puts you in a relatively unique position. So I'm curious to know, thinking about these results, what did you find most surprising?
Yeah, maybe I'll jump in. So I think we've talked about it a bit so far that there's been a kind of groundswell of momentum across the sector. I don't think that's surprising.
No.
And I don't think it's surprising that we've seen people talk more than ever before. Like we've seen a 59% increase in press releases talking about AI, an 84% increase in LinkedIn posts. There isn't a bank in the index now that doesn't talk about AI somewhere in their investor materials. So there's more talk, and I don't think that's surprising given the amount of activity that's going on and given the kind of demand from analysts and demand from from executive leaders to communicate what they're doing. But I think the surprising thing to us has been it hasn't the talk's gone up, but we haven't seen so much specificity about business outcomes. So out of the 50 banks we track, only 26 of them, like everyone's talked about use cases, everyone's talked about what they're doing, but only 26 of the 50 gave any kind of like business impact in their investor materials about their use cases. So that's not dollar value. That's we've saved time, we've had net promoter score improvements or products or service improvements. And out of those 26, only 6 put any kind of dollar value on the business outcome of a use case. And JP Morgan and DBS were the only two to give an overall total dollar figure, Singaporean dollars for DBS, of the return of their AI investment this year.
Should the cynic inside me be saying to himself, well, the reason we're not seeing a lot of specificity on business cases is because there isn't very much of it?
It's a good question. I think there's definitely some of that potentially that's true. I think a lot of it is getting use cases into production for the first time. Maybe the ROI isn't quite there yet. Maybe they're not. They therefore, the ROI might not be there. They also might not have maturity of their return or ROI reporting. There's quite a lot of investment that needs to go on internally to think about what those metrics should be, how to aggregate that up across all these different use cases, all these lines of business, and then communicate it at a group level. And I also think once you then communicate it, you've got analysts who are going to hold you to that. They're going to ask more and more questions about it, and you've also got regulators that then come asking. So I think the cynic may be true, but I think there's also some other factors going on.
If you look at those 4 principal areas you measure, talent, innovation, leadership, and transparency, it sounds to me as though transparency is still the area that shows the greatest room for and perhaps also need for improvement. Is that fair?
You go for it?
Go for it.
Yeah, I mean, it's a tricky one because by transparency, I guess we're looking at, banks are a highly regulated sector. We know that there is so much going on under the surface that we can't see from the outside. So I think there's undoubtedly been an incredible amount of work going on internally to obviously engage with the regulators, work out how to adjust risk management frameworks to accommodate AI and then Gen AI specific risks. So there's a lot going on under the hood, and I think there's a lot more work to be done. But I also think there's then this secondary factor, which is how do you then communicate that? And is there a difference between sort of responsible governance and also trust, which is, building that narrative and explaining how you're using AI to your customers and to the public. And I think that, it's somewhere we've seen a massive ramp up versus last year. The data last year was very, very thin. There was very, very little in the public domain. But I think there's probably a lot more work for the banks to do in terms of communicating what they're doing to the public and their customers.
12 months from now, we are going to be talking once again about the things that you find most surprising. But if you had to crystal ball gaze, what do you think we're going to see happen over the next year? And what's going to be reflected in the way that you measure things?
I mean, back down to sort of the, where are the use cases at, right? Mm-hmm. So as Teresa was saying earlier this morning, it's a year of experimentation, right? And some use cases have been put into production. They are internally facing. They're low risk. So there's still a lot of sandboxing going on in terms of how do the leading banks, particularly because they're well set up to do this, think about moving more use cases into production and into higher risk areas. And how do you make sure that you get your cycle time or your time to production down as much as possible? Everyone's aiming for sort of a below 90-day cycle production, time to production time. So are we able to achieve that when we move into higher risk use cases? So that's going to be top of mind for most of the banks going into next year. So as we see use cases moving into production of low risk and high risk mix, then it's also going to start to hit the bottom line. We're going to see cost income ratios improve. We're going to see it start hitting the bottom line of the banks, maybe not completely fully in 2025, but certainly through in 2026. So that's sort of the leading banks will be definitely on that road. And then you've got the banks that are, moving quickly, and the ones that entered the top 10, for example, this year, really doubling down, trying to catch up to the capabilities of the leading banks, JP Morgan and Capital One, for example. And so going to be putting that, the same emphasis on getting these use cases with that mix of low and high risk into production. And then I think there's going to be an enormous amount of pressure from the banks lower down in the index, from shareholders, from boards, saying, what's your AI program? What have you got in place? What is the strategy? Are you spending more money? Are you, what's the talent strategy? It takes, as we were talking about before, if you don't start to think about that, it's going to be harder and harder to attract the talent. It's going to be harder and harder to train and to reorganize yourself internally.
I think quite amazingly, we haven't really talked much about Trump yet. One of the things that many people expect to see happen under Trump 2.0 is a change in capital requirements for banks, and perhaps a lighter regulatory touch that allows banks, smaller banks, and perhaps even larger banks as well, to consolidate. Will either of those things result in perhaps a change in the way that some of these institutions approach artificial intelligence, the investment in AI, and in the case of lower capital requirements, maybe free up resources to allow them to invest and become more competitive with the leaders? Yeah,
I mean, I think we're watching this. I mean, that consolidation and the freeing up of resources, again, comes down to the leadership of the banks. If they recognize that this is a big and important thing to resource up, and there is more resources, because it's often the question of a resource constraint, right, which is partially true. It's also a decision you make that this is important for the bank. But absolutely, it helps when you've got more resources freed up that can invest into, to the talent and to pulling all of the innovation levers that a bank can pull, and sort of getting, looking at your data infrastructure and your governance, that needs resources. So, of course, with more resources, that could become a really positive thing for some banks here in the States.
I'm super mindful about sticking to time, and we're running out of it, but I do have to ask before we finish, what is next for Evident? What will we be talking about next year that we haven't talked about this year?
So firstly, on banking, we will be increasing, we'll obviously be refining the index. So refining the methodology, trying to keep up with where the best practice is emerging. We're launching a new benchmark called the Outcomes Benchmark that's really getting under the hood of where are banks deploying use cases, how are they measuring ROI, what are the critical enablers that are enabling them to get those use cases into production and delivering value. So we're launching that in January, so that's very exciting. And then we're also expanding, so we're going to be covering insurance for the first time and payment providers for the first time. So in a year, hopefully we'll have some really good, juicy data on that.
What about asset management? Is that in the future?
Yeah.
Definitely.
I mean, we want to cover as many as we can. We're just trying to do it one by one.
All right, ladies and gentlemen, Annabelle and Alexandra.